Massive shifts in Pakistan's auto sector. Digital finance is getting a bold new face. And the US-China trade war? It's back, and bigger than ever. Welcome to your business and economic outlook for April 11, 2025, where Pakistan meets the pulse of the global economy. Before we dive in, don't forget to hit that subscribe button, tap the bell icon, and stay informed with V4 World, your daily dose of business, economy, and global market news. Pakistan's auto market is revving up again. Total sales of cars, pickups, jeeps, and LCVs hit 11,098 units in March 2025, up a strong 18% year-on-year, though slightly down 8% month-on-month. What's driving demand? Stable economic policies, falling interest rates, lower inflation. New model launches in 9 months of FY25. Total vehicle sales surged to 100,868 units, marking a massive 46% jump compared to 69,081 units last year. But it's not all smooth. Tractor sales dropped by 67% YoY in March. Truck and bus sales rose 47% YoY, but dipped 5% MOM. Pakistan has unveiled its first ever national framework to regulate virtual assets, VASP, and virtual asset service providers, VASPs. Key objectives: comply with FATF Recommendation 15, combat money laundering and terror financing, enable blockchain-driven financial innovation. This policy is a game-changer, balancing regulation with innovation while offering a safe space for fintech growth through controlled experimentation. Donald Trump has slammed a 145% tariff on Chinese goods in a bold protectionist move. While some sectors, like autos, steel, aluminum, semiconductors, and energy, are excluded, this aggressive stance has escalated global trade tensions. Meanwhile, the EU welcomed a 90-day US tariff suspension, pausing its own retaliatory measures on €20 billion worth of goods. Markets are whiplashing worldwide. The S&P 500 soared 9.5%, Nasdaq gained 12.2%, while the Dow dropped over 1,100 points. Back home, the Pakistan Stock Exchange tumbled by 1,335 points, with the KSE 100 closing at 114,853, reflecting investor anxiety over the global trade war. The State Bank of Pakistan cut its benchmark rate by a staggering 1,000 bits per second, from 22% to 12%, aiming to stimulate the economy. Yet, surprisingly, the private sector returned 712 billion rupees in Q3 FY25, a 52% drop in bank borrowing. Why? Banks are avoiding taxes by limiting loans. Slow economic activity, weak manufacturing and agri-output. Expected GDP growth now just 2.5%. The SBP's foreign exchange reserves rose by $23 million. Now totaling $10.699 billion. More importantly, a $1 billion boost is expected soon, thanks to the second IMF tranche already approved. China announced 125% retaliatory tariffs on U.S. goods and dismissed future sanctions, saying it no longer makes economic sense to import from America. This triggered a global market pullback. Tokyo fell 4%. Gold hit a new record above $3,200. Oil and U.S. Treasury bonds plunged. Meanwhile, ASEAN and Timor-Leste opted for dialogue, rejecting U.S. tariff logic and forming a geoeconomics task force to shape a unified regional response. The world is shifting fast, from local auto rebounds to global tariff wars and digital revolutions. Stay informed, stay ahead. Subscribe to V4 World for daily updates on business, finance, and economic policy, both in Pakistan and globally. Drop your thoughts in the comments. Do you think these trade wars will trigger a global slowdown? Like, share, and help us grow. Disclaimer: this video is for educational and informational purposes only. It does not constitute financial advice. Always do your own research or consult with a certified financial advisor before making investment decisions.